Wednesday, September 20th, 2017. Monaco 64 here. So I want to look at the markets, what they're doing early this morning, and then I'm going to talk about the Federal Reserve and the FOMC meeting that ends today and has been portrayed as a historic one. First of all, it's quarter to 8 a.m. So spot gold, 13.1285. We traded up to a high recently, just about half an hour ago, of 13.1443. So gold rebounding a little bit off the lows we've seen in the recent days, around 13.05, 13.06. Silver 17.32, up a cent. The range has been 17.26 to 17.37. The Dow is unchanged, 22,376, the Dow futures. S&P futures down 1.5, 25.05. The dollar, currencies are very quiet so far this morning. Dollar down a little bit slightly against the yen, 13 pips at 111.44. The range has been very narrow, 111.32 to 111.65. Euro back above 120 against the dollar. It was up about 7 pips. We are at 120.01 as I speak. The range has been 119.86 to 120.20. The British pound, 135.17, basically unchanged. Range 134.92 to 135.32. The other stock markets, the FTSE up 8 points at 72.80. The DAX in Germany down 14 at 12,547. So, we've got the FOMC meeting today, and there's an article here in Zero Hedge, full preview of tomorrow's historic FOMC meeting. Yeah, and they're supposed to announce today. They're not going to raise rates, but they're going to announce what they call the normalization of their balance sheet. And what does that mean? Well, basically, it's the reverse of quantitative easing. They'll start selling all the mortgage-backed securities and all the treasuries they bought since they started doing QE. I think it was late, after the crisis of 08. I think 2009, 2010, all the QEs they did, Operation Twist and everything else. Just to give you an example, the Fed's balance sheet had about 800 billion in assets, mortgage treasuries mostly, before the crisis of 08. Now it has about 4.5 trillion. So, they did a lot of, they bought almost $4 trillion of worth of mortgages, mortgage-backed securities, and also U.S. treasuries. And even though QE stopped a couple of years or so ago, they've been reinvesting because a lot of the bonds they buy come due for maturity. They're paid off by the U.S. Treasury. But they're taking these proceeds and reinvesting it, and that's why their balance sheet has stayed the same. Now they're looking to actually sell off the balance sheet. There are projections of how much they're going to start selling each month, and they're going to do it very gradually. Some Fed members think this is going to be like watching paint dry. We'll have to see. It will be usually when the Fed changes course on interest rates, there's a disaster or a recession. I think I listened to someone and they're talking about that the last 13 times the Fed changed the rate policy or the rate started hiking rates, 10 out of those 13 times there was a recession. This time, it's something they've never done before. They're going to have to start unwinding all the money printing they did. And, if they think it's not going to cause any accidents in the financial markets, maybe they're right. Maybe they'll be able to have their cake and eat it. Even the ex-Fed president from the Dallas Fed said that he was against QE2, I think, in 2012, voted against it. He said all QE has done is injected heroin and cocaine into the financial markets. So if you, equate, do that analogy, and now you are taking away the cocaine and the heroin from the market, that might cause a few problems. I don't know. People who are addicted to drugs, when they go off the drugs, there's huge problems, and they might go back to it. We'll have to see how the financial markets react. In terms of the economy, I don't think, I think the economy has never really recovered, the real economy, even though we hear President Trump saying that the economy is doing great, unemployment is the lowest in ages, but, it's not, because unemployment is a doctored number, President Trump. They only count the people who are looking for jobs. There's almost 100 million Americans of working age who have given up and are not even looking. So unemployment is more, like 20%. So I don't, when Obama was president, he never mentioned that. He probably would have mentioned that all the people are out of work. But now that he's president, he's changed his mind. It doesn't work like that. And when the Dow was doing really well under Obama towards the end, he said it was a huge bubble. Now, with the Dow at 22,000, he's saying the economy is doing great. So, it's you can never trust politicians, I guess. And the other thing that I did listen to quite a bit of his speech at the UN yesterday. It sounded all very good in the beginning, cooperation, sovereignty, prosperity between nations. He said, we're going to put America first and you should put your nations first. But then he started threatening, countries that are trying to defend themselves, in my opinion. Countries like North Korea, Iran. I've never seen Iran invade another country. They had a war with Iraq, which the U.S. backed Iraq on. But from what I know historically, the U.S. actually intervened, and that's recorded. The CIA intervened to depose a democratically elected government in Iran in 1953. It was Mossadegh. And they put the Shah of Iran in charge, the Americans. And then when the Shah of Iran probably wasn't playing ball with them, they got rid of him in 1979. So the Iranian Revolution. So, there's an interesting article on Zero Hedge, how the military defeated Trump's insurgency. And I think, the way he spoke at the UN, it shows, bragging about how the U.S. is spending $700 billion on defense and how America is strong. It's like, and at the same time saying countries should cooperate and respect each other at the UN. So this article says, Trump was seen as a presidential candidate who would possibly move towards a less interventionist policy. That hope is gone. The insurgency that brought Trump to the top was defeated by a counterinsurgency campaign waged by the U.S. military. The military has taken control of the White House process and is now taking control of its policies. And it says it is schooling Trump on globalism and its indispensable role in it. I guess the U.S.'s indispensable role in it. Trump was insufficiently supportive of their desires and thus has had to undergo education. So Trump is talking like a neocon now. So there you go. It's like George W. Bush before he got elected, or while he was president-elect, campaign on a platform or non-interventionism. Look what happened to that. It didn't end very well. So it just goes to show that the shadow government, which is the security apparatus and military apparatus still in charge in the U.S. So what else? Central banks. Yeah, you know, it's going to be interesting. It's not going to happen today, overnight, you know, after the Fed's announcement and decision. They also have a press conference. So they're going to talk about economic projections and things like that. My feeling is that without central banks, we'd never be in the situation that we are. Without central banks and fiat money, you know, the power to print unlimited amount of money by governments so they can spend and put their countries in debt wouldn't happen under a gold standard. It wouldn't happen under a system where there's no central banks, because the central banks have been given the power legally through governments and congresses and parliaments to actually print money out of thin air or debt out of thin air and support these policies of heavy spending and money printing. And until that's, you know, that system collapses, we're going to have the troubles we have in the financial system. The crises are going to get bigger and bigger. The amplitude of the crisis are going to, you know, get bigger and bigger. Will this trigger a crisis? I don't know, but it could be the start. You know, the QE, you know, gave rise, you know, QE created this massive stock market bubble, bond market bubble, and bonds are even a bigger bubble because interest rates are at the lowest in recorded history. So you're going to have to go back thousands of years. Some interest rates are even negative, which don't make sense. Historically, as I've said before, interest rates should be, you know, for the more credit-worthy nations, around 5-6% in general. Now they're around 0, 1, 2%. It doesn't make sense. So, yeah, the problem central banks. How it will all end up, I don't know. But the way to protect yourself is not to be too involved in their game, and by that I mean not to have all your assets in, you know, with them in the system where you have counterparty risk. So pay off your debt as much as possible. Have physical assets like gold, silver, even property unencumbered with you know, with a mortgage, or farmland, or, you know, works of art, fine wine. And even the stock portfolio, but be prepared for that to, you know, go down in value, and hold as much short-term, you know, cash, basically. Paper money is basically a bond without, you know, any interest. Right now, almost everything is cash. A lot of it is cash if you think about it, because the cost of living is going up more than, you know, 3-4%, and interest rates are near zero. So holding government bonds is a losing proposition. But people, you know, big investors are still doing it. Are they fulfilling their fiduciary duties? I don't think so, because they're buying into the fake statistics or the manipulated statistics by the governments. So if you enjoyed this video, please give me a thumbs up, share it far and wide, and subscribe to my channel if you haven't yet. And you can follow me also on Steemit and on Twitter. I'll talk to you later. Bye.